Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are just after market close on Friday, October 15th. We're going to take a look at SoFi today. Now, SoFi had a bit of a wacky day, and I think probably a lot of folks have some strong feelings as to why. I think they're probably correct. There was a lot of open interest at the $20 call level today, almost 34,000 contracts open. So multiply that by 100. That's how many shares we're talking about. And so for market makers to have to go in and buy that up, that would have definitely lit a rocket under SoFi, or lit a fuse under SoFi's rocket, whatever. And for whatever reason, there's a preference to have those expire out of the money and not have to deliver on those shares that those contracts represent. So I honestly think, based on the chart today, that that's essentially what was going on. That's sort of like what the market makers were trying to accomplish. And I'll sort of talk about why. I was tweeting about it a bit today, but I couldn't spend all day on Twitter, of course. But anyway, we saw sort of a quick rebound today, and made a very quick run. At this point, 7 pennies shy, just 7 cents shy of that 1993 zone, which I think is our next friction point. And here's when I started tweeting, when there was this downtrend that was obviously having this resistance zone, and it was making an attempt toward it. And what was interesting to me about it was a few things. Let me put the MA on here. So you see all of these things converging at the same points. At this nexus point, you have the extension of the resistance line. You have the VWAP in the neon green or whatever, and you have the MA that you can barely see in red because they're all kind of laying on top of each other. And then I think on any other day, if it wasn't a day with which they were trying to get the price to stay under a certain mark, in this instance $20, I think on any other day, this type of motion comes in, this to me would have looked like a bear trap for sure. And it would have come up and broken that resistance, which it did, which then breaks it over the 180 and also breaks it over the VWAP, and then it starts to go. And then on the test, it looked like it was going to rebound. And I think on any other day it would have. And I think that there it would have gone and gone ahead for that test. But I think because there was a want to expire those $20 call options out of the money, we saw it just for no great reason just kind of fall right through, and then go ahead and just kind of pitter patter around there the rest of the day and not really do anything, and just sort of like sticking to this level for no good reason, right? There's even this huge buy volume coming in here on this minute, over 1 million in buy volume coming in, and it just doesn't do anything. It just keeps going sideways, and did I say sideways? Sideways, and even slightly down. And so I feel for anyone who had contracts that expired out of the money, but looking at this, it was just kind of chuckle worthy. It was just kind of funny to watch and be like, oh, okay, seems pretty obvious. This motion seems pretty obvious what's going on here. Because like I said, on any other day, this confluence of events, that just goes, and I think it makes a run at that 1993 and really starts wrestling with that level. So what have you. What I had said at this point, this was the clear pivot point. So I had said, SoFi is going to wrestle with this 1976 level, because you see this is where it was pivoting. Resistance that flipped to support that flipped to resistance, right? That was the pivot point, the higher pivot point on the day. And that's where we saw it start wrestling, right here. And that's where then it dropped, right? Here's that level, 1976, right? It flipped it from resistance to support, which you see right here, and then it didn't hold the support, and then it flipped it back to resistance, but that was clearly the pivot point. So I'm going to get rid of these because these were just intraday things, but I wanted to share that because it was really interesting to me, and it was just interesting to see how that played out and sort of why I think it did. All right, let's flip over to the daily, see where this leaves us after today, and then actually we're going to catch up on a bunch of things with the data that we haven't looked at in a while. We're going to check out some fails to deliver. We're going to check out the short data, of course. We're going to check out some of the dark pool activity after we finish up on the daily here. Now, we got like an inverted hammerish kind of. I mean, the body's a little bit fat for that to me, but like I've been saying, for me, we're really securely in this up channel for now. I'll talk about what this white line is in a minute. But to my mind, we have a 1904 support. We have then this lower bound of the channel supports. And then even if we do start fighting with that lower bound of the channel, we have pretty quickly that 1847 support. So while I don't want to see it drop $1, you guys know that I have these shorter term, I mean, they're still like a month out or so, but shorter term call options, trying to make this IV play around the earnings that are coming up in November. But, I do think in terms of sort of like a pattern here, we would want to watch. And if you're not familiar with what this is, you just look it up. But Hanging Man candlestick pattern, if you want to look up Hanging Man, we just want to be cautious of that because that certainly could come out here and could certainly bring us down even potentially through that 1847 zone. But, certainly just because candlestick patterns to me are another one of those things that give you sometimes a better than chance opportunity to make a decision, but of course they aren't 100% spot on, right? And I do think that the manipulation that the stock went through today is probably not super accurately reflective of where the buying and selling pressure is organically. And so if those collars or those restraints are loosened next week, which I don't see a super great reason why they wouldn't be, then this could sort of have just been a glitchy kind of day, glitching for, like I said, the reasons of market makers really wanting those $20 call options to expire out of the money. If we look at what's going on for next week, sort of be in a similar situation here, 7,400, but also strong numbers at 19.5, of course, as you would imagine. Today, oops. Oh no, okay, I thought they took it away. So versus today, well over 33,000 and nearly 8,000. So you have here over 40,000, and of course this number will go up next week, but right now you just have 14,000. So certainly a big difference there. So it might be allowed to sort of move freely. We'll have to see, but that's what's on my mind. Watch out for the Hanging Man. Know that you have support here and here and here. They're all really tight in. They're all like within $1, right? About even less. And sort of see how that plays out. Now on the weekly, this was the interesting thing that I saw. I'm going to flip this to old Yeller. Because here, so there's barely a chart on the weekly, right? Because it hasn't been around that long. But this is taken way back from, yes, IPO days, but from a charting perspective, I'm not concerned that it was, this was the hype based on SoFi was going to be the target, right? So to me, it has relevance. In any case, we look at this sort of, don't want to say downtrend, this resistance line, and it's really coming very close to this on the weekly now, right? This week, first of all, this candlestick is saying we're up over 19.5% this week. So congrats, SoFi holders, especially SoFi previous bag holders, who hopefully are feeling a lot better now, hopefully have done some work on their own to flip their dire circumstances that they probably felt like they were in back here. But in any case, we're getting very, very close. So this is going to be an interesting, if we stay in this channel and we start to intersect with this, that's going to be really interesting to me. So I'm going to leave this on and we'll see it on the daily, of course. And so that's going to be very intriguing to see what happens if and when we get this bottom bound of this channel reaching that. And that would happen November 16th, November 17th, right around there, and where we push. But I just wanted to point that out. But if we broke that long-term resistance, that would be really, really interesting. Plus, if we do start to get some sort of gamma, I don't want to say gamma squeeze, but some gamma-ish activity, because $20 call options are then in the money and people start, putting feelers out for 25s, 30s, what have you. That could be additionally interesting, especially if any of those 20s that become in the money are currently not covered. They're not covered calls, and whoever wrote those would have to buy up shares to cover them. But of course, that's what the manipulation is there to try to avoid, right? So we don't want us to just get continuously stuck in this type of situation. That said, if we don't continue to parabolically move up like we've seen, that's okay too. If we kind of consolidate in this zone, even if we kind of consolidated, that would push us to this nexus point, right? That would get us there. So moving sideways to me would even be just kind of okay, because it still gets us to a similar point, and that might sort of ramp up the ability for the next breakout. We'll have to see what's happening, of course, but it's all crystal ball speculation at this point. But these are the points at which I'm looking at on the daily. All right, so flipping over to the data, Ortex showing 7.42% estimates, just a smidge up today. You can see here in the purple, it's just kind of starting to flatline, move sideways a little bit. So we'll see if shorts make any big moves in the coming days or weeks. But for now, they're hanging out just below that threshold of 10%. Cost to borrow not going anywhere, utilization just sort of staying where it is. Now, similarly, we keep an eye on fails to deliver, because a big spike in fails to deliver could be indicative of a lot of naked short selling going on. Now, it's more likely that you get that naked short selling if there is actually high utilization, like as high as 100, which we are nowhere near at this point. And as you see here, this is the price, but this is the fails to deliver, and this is basically nil. At this point, I've done a lot of videos on fails to deliver, especially with SoFi. So just go back and look at those if you want more information on what fails to deliver is and what it could mean. We also hadn't looked in a while on institutional ownership, but we're just shy of 40% at the moment. I honestly can't remember. This feels like it was about where we were before. It might be exactly where we were before. They may not have updated it since we last looked, but that's obviously a nice stabilizing effect, of course. Effectively, not to use this term, but effectively locks up some shares that then just aren't available to be traded, and then the bidding occurs on a smaller number of shares in the free float, which can be very nice and helpful for the bulls, of course. Now, on the dark pool data, I've also previously done videos on dark pools, specifically with SoFi, and in that video, I go through what the different reporting structures are within FINRA, because there's this ATS data and then there's this non-ATS data, but both of them, you sort of have to look at both and then add them together to get a full picture of what's happening. Even then, you probably don't have a full picture. Even if you do have a full picture, you have an outdated full picture. September 6th, right? It's 5 weeks later. So in any case, if we look at these two, this is the week of September 6th, and this is the week of September 6th. So if we take 6 million shares here that were traded in the dark, and another 23, almost 24, so let's just say it's 30. It's just shy of 30 million shares this week, the week of September 6th, that were traded in the dark. So just shy of 30. So we go to the weekly, and this is saying 9/6. I think that's a Monday, so 9/10 would have been the Friday. And Webull is telling me almost 72.5 million visible trading volume. So what we're seeing is 72.5 million. What's happening in the dark is nearly half of that, almost half of that, is being traded in big blocks, right? You see these in the dark in ways that theoretically aren't impacting the share price in the public facing market. And I say theoretically. If you go back at my SoFi manipulation videos, you'll see why I say theoretically. I still think that it can be used to manipulate the price of the markets, the public-facing market. But pretty interesting to see that there's that much activity happening in the dark pools, and but also good to see that the short interest is staying relatively low. The fails to deliver are basically non-existent, and institutional ownership is staying near 40%. So those are all, to me, really good signs. I did recheck LinkedIn today. I didn't see anyone new who was purporting to work for SoFi Bank yet, but continuing to keep an eye on that, of course. We do have 3 individuals so far that are slated to be working there. As we sort of wait for that next big catalyst to be announced, of course. But I think that'll do it for this video. I hope that you all had a good trading week and that you enjoy the weekend ahead. And as always, I appreciate you watching. I will see you in the next video.